Let's take a look now at some of the opportunities across the markets here in the UK. And there's been an outperformance for some of the small caps over the larger caps on the FTSE 100. We're talking now to Chris Boxall from Fundamental Asset Management. Chris, welcome. It's good to talk to you across. Good to talk to you across the broadband networks. Unfortunately, we're not able to speak face to face, but it's good to catch up nonetheless. Explain more about what's been happening with AIM stocks, because there seems to be this outperformance in that sector overall. What are you witnessing?
Well, it's the same old again, really. They got, really battered to begin with. Huge sell-off. First of all, we had the large caps being hit. Then it hit the small caps. Illiquidity came in, and there was a big sell-off. But they have been in favour again, and some have been bouncing very, very strongly. And the market, AIM as a whole, is bounced incredibly strongly, much better than the FTSE. I mean, looking at the numbers, I think from the lows, AIM's up 45%, FTSE's only up 18%. Quarter to date, FTSE's up 8%, 100 I'm talking about, and AIM's up, and this is the AIM index, up 25%. And it's really interesting to see what's been driving that bounce largely. And
Well,
it's a lot of big stocks.
That's the main question, isn't it? What is it that's behind the motor behind this rise that we've seen? Dig down a little bit deeper and tell us what's been going on in terms of some of the individual, not necessarily stock movements, certainly sectors to watch out for.
Well, we've had, one sector that's been unloved for many years, and we won't go into it in too much depth here, but it has really been unloved, has been the healthcare and early stage healthcare businesses. And of course, a lot of these, anything related to COVID-19 testing and vaccines, COVID-19 related vaccines, has shown huge growth. But the big question is, who is going to succeed ultimately in these areas? And a lot of these businesses are very untested. They're not all going to come out as winners. But that's seen a wave of interest at the lower levels. And we've seen some of these very tiddlers, minnows, now expand into 100 million, 200 million companies. But another sector, which I think illustrates the delights of AIM and the difference that it can add to portfolios, has been anything connected to video gaming.
Well, let's take a look at that, because this sort of links in neatly with where we are and what we're doing now as people generally, because linking in more online, video gaming, of course, has been something that people maybe have more time now for, because they're not commuting, they're in front of their computer screens, and perhaps maybe gaming is something which does certainly appear to be more appealing in terms of opportunity.
Absolutely, and they've some stocks on AIM have been incredibly strong and robust in the pandemic. A lot of the video gaming related companies have put out fairly strong announcements, clearly, as you suggest, benefiting from this stay-at-home culture, where people have got more time and need some distraction. And a lot of them done really well. And it's not just been on AIM; it's been on the US markets as well. But the key difference here is you can't get this exposure on the UK main market. Well, you have Games Workshop, which is slightly different on the UK market, but basically that's it. So to get your exposure to this exciting high growth sector, you've got to venture into AIM, and some of these AIM companies have now got pretty big.
Which ones are you talking about in particular? Which ones attract your attention more than others? And for what reason?
Well, I'll start with one that we actually hold and have held for a while, thankfully, called Team17 Group. And each of the ones I'm going to discuss are very, very different. They have their own nuances. And Team17 Group has its own games. It's well known for the Worms franchise, Overcooked, Escapist, which have been around for a long time. But it also helps, so it's got its own IP, but it also helps independent developers develop their own games. And Team17 is very much a group with a huge portfolio of games, and it makes a lot of revenue off its back catalogue, which is interesting. And the shares have performed very strongly since IPO. It's still majority owned, or a big stake is owned by its founder, and she's well known in the industry. And it's done really well. High margins, great cash generation, a terrific performer. And that's one example.
Before we move on, can I just quickly go back to the chart, because you're talking there about reliance on back catalogue. You're talking about the good performance of the company. I'm hearing nothing about the opportunities here to take this any further up. Are you happy to hold at these levels? Are you adding to your position, or is this a point, do you think perhaps possibly maybe it's gone a little bit too far ahead for where perhaps it may otherwise have been?
I think the rating now looks pretty full, especially compared with some of the bigger, very large US peers, which have some very big games. However, we have, we were adding a few weeks ago on certain portfolios because we still like it, and it has quite a different presence in the market. We like the fact that it's not just reliant on its own IP; it's supporting others, which I think is quite powerful. And it's a nice blend. But yes, trading a little bit more cautiously than we were, and wouldn't necessarily overload at this point for sure, because it does look as though it's run. The key question for all of these, all the ones we're discussing in the whole sector, is how are things going to progress when lockdown finishes and people get back to a return to some kind of normality?
One of the other stocks on your list, I know, is Frontier Developments. A similar sort of company, or is this, obviously it's in the same grouping area, but does it do and rely on the same elements of competition?
Very different. So Frontier Developments is mainly about bigger games that take longer to develop. It's growing its own IP, although it has also an arrangement. It's recently signed up a deal with the Games Workshop to promote its games, or to develop a game for Games Workshop. But Frontier Developments is largely about bigger games, Planet Coaster, Jurassic World, for which it's part of the Jurassic kind of franchise. So it's not actually the IP owner of that one. But so it's bigger games, fewer games, greater reliance at the moment on releases rather than the back catalogue. Now, the rating of that one to us looks very, very rich at this point. Again, the founder controls a big stake in it, but that's really shot up on the back of some very positive news flow. But we think that looks a bit full. We'd like the business, but wouldn't necessarily be stepping into that now, although the outlook looks very promising.
How does Codemasters compete against these other two? Because that, again, is another one of these companies in the same space.
Codemasters, again, very different sort of game genre it's focused on. It's focused on racing games. And Codemaster has its own smaller franchises, but it's very reliant on the F1 deal that it's got. So it's got the license to create and develop racing games with Formula One, which is owned by Liberty Media. And there's some concern as to how long that may extend, and also its reliance on that game. But then again, that offers it's a lot cheaper than the other two. It's trading at a much more modest multiple. Clearly, investors have had their concerns. It's slightly disappointed on an IPO, but it has there are interesting facts with that one as well, because there's the growth in esports, and conceivably this Codemasters can do very well out of esports, and there's no racing on at the moment, which is obviously a downer. But there's been this move towards esports with racing drivers competing against each other in a gaming format, and that's quite interesting.
We've been talking there about some of the publishers. How about the game developers themselves?
Well, you've got these two other primary ones on AIM. One of them is pretty big now, called Keyword Studios, and these both Keyword Studios and another one we're going to mention, Sumo Group, are both developers. They're the service providers, so they provide services to the game developers, the IP owners or the publishers. And Keyword Studios has adopted this buy and build strategy, where its growth is predominantly through acquisition, and it's been absolutely manic. I mean, it's bought so many companies. But again, it's doing pretty well. But we much prefer organic growth, where the key driver is organic growth, and we're always a little bit wary about buy and builds. Generally speaking, in our experience, they often go off the rails at some point, and you clearly don't want to be holding them then. And the rating is also quite rich for a business which doesn't actually own any intellectual property, or relatively little intellectual property. Sumo Group, another one, a lot smaller, more focused on organic growth, that has been buying as well, is also trying to develop its own games. So it's trying to develop its own intellectual property. Sumo are a bit more modestly valued as well.
What about the point about knowing your investments. This is an area which is very specialized. There are some people very much into computer games. I'm not one of them, but I'm looking for investment opportunities. It's a very difficult area to understand. You're talking there about a lot of jargon, this business about intellectual property, what you own, what you write, what you publish. It's quite a difficult area, it seems to me at least, to get into. Do you find this? I mean, you're an accountant and you approach this from a very numbers sort of aspect. So you're looking at balance sheets, you're looking at profit and loss. Is it an area which is either misunderstood or difficult to get into, do you think, if you're not really into gaming itself and understanding the fundamentals of the business?
That's a really good point, and it isn't just about the numbers and the fundamentals, although the fundamentals for this area, this sector, are really attractive. I mean, a lot of these businesses, Frontier Development's a little bit of an exception, maybe Codemasters as well, but if you look at on the pure numbers, these businesses produce terrific returns. So perfect returns almost, high operating margins, very high returns on equity. So they tick a lot of the boxes that are almost a value investor would focus on. But then again, they're also growing incredibly quickly. In terms of finding out about them, it's actually far easier to find out about a business like this because there's so much noise online about them. So many people are talking about what's the next greatest thing, whether it's Fortnite or Minecraft or Grand Theft Auto or Call of Duty or The Escapist or Worms. No, there is a lot. There is a lot of information flow freely available out there. So it's perhaps not as hard as an industrial group where most people haven't got a clue about what the business actually does.
You mentioned a couple of big names there that even I know about, Grand Theft Auto. FIFA, of course, is another one, owned by some large companies. These American companies, though, aren't they? How different is the American market in this area to what's happening here on AIM?
These are the AIM companies we spoke about have market capitalizations ranging from 700 odd million down to 300 odd million. The big American groups, Activision, Blizzard, Electronic Arts, Zynga, Take-Two, are multi-billion dollar companies. I think the largest, Activision, is approximately $50 odd billion market cap company. So it's at a whole different level. And it's clearly reliant on some very, very big blockbuster games, which have sucked in a lot of players and upgrades to those games that people are wedded into. And saying that, the valuation, clearly they're going to struggle to maintain the kind of growth profile given their size that they had before. That's what makes some of the smaller ones more interesting. But their valuations in isolation look quite modest also compared with the UK ones, which is the risk. So as an investor, where do you go? Do you pick your big, more reliable blue chip US names in this space, or do you go for some of the smaller AIM niche providers? As I'm managing, a lot of our AIM book is in it for inheritance tax planning purposes. I'm also forced into the AIM space, and it's great that AIM can bring you such variety. Unfortunately, I can't touch clearly the big US names for our AIM book.
Yeah. Just stepping back again and looking at the big picture, where do we go from here? We still don't know yet, of course, whether COVID is going to deliver another great big hit to the economy with a second wave. There are a lot of debates about that amongst the scientific community. How happy do you feel with AIM having made that 40% upside from the lows that we've had? Do you think things are looking a little toppy given the economic environment? We're hearing today another large company in the air, EasyJet, of course, cutting costs. We know a lot of stresses and strains within the economy. And of course, it's hitting these small cap companies disproportionately in some areas.
Yeah, I mean, we're keeping a close eye on all AIM companies. It's actually been very interesting, closely monitoring the news flow from them. And you, if anything, we picked up an even better idea of the nuts and bolts of their businesses, how they're surviving or developing, evolving in the current climate. A lot of smaller companies. I looked at one today. I mean, its business outlook looks pretty awful. Given that its exposure is to the dining out sector. So you have a lot of companies like that on AIM where it's very, very hard to judge what the next year and a half, 2 years might bring. However, thankfully, AIM has a lot of technology in it, and the technology sector has really been proving itself in these times. And so it's been quite an interesting place to be. And a lot of AIM companies, not the majority, but a large number, have been relatively unaffected by it all. And conceivably, this may change their working practices. A lot of them have been operating very successfully from home and may continue to do so.
Chris, we'll have to leave it there, but thanks indeed for joining us. That's Chris Boxall from Fundamental Asset Management. We'll look at some of the interesting stocks on the AIM market. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.